Yeah, many billions.
Several hundred billions. But Vildana, we don't have much time left, but I am curious what the reception has been like, because I don't know, a lot of people were really married.
Cold shower.
Gold shower. Go on.
Well, the one thing, so in crypto, if you end up writing about the crypto space, sometimes it doesn't matter if it's a positive or a negative story. You'll still get a lot of hatred on Twitter. So one of my things was, okay, don't at me on Twitter, no matter what I come up with. And actually, all the at me's were very positive. Even people within the crypto space were very receptive to this idea that, okay, market cap is just not a good way to be measuring the space. This is a really good, insightful look at what the crypto market is actually valued at. And it's just interesting to take a look at some of these readings and technical measures like the realized value one.
So the internet is good.
Wow.
Today, it's good today.
Okay, we'll just give it a few hours, Vildana, and I'm sure, some
well,
people
we'll see how this.
Maybe I shouldn't have done this
goes
interview.
over. Yeah.
Crypto summer warmer than crypto winter.
Love that.
Vildana Heinrich, cross-asset reporter for Bloomberg News, joining us from the Bloomberg Interactive Brokers studio. Check out her story. It's featured in the current issue of Businessweek magazine, available on newsstands, on the Bloomberg terminal, and at Bloomberg.com. A big thank you to the editor of the magazine, Joel Weber.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Taylor Riggs, Shonali Basak. We're joined now by Katie Greifeld, filling in for Carol Massa and for Tim Stenovic. So we're putting a more productive Labour team together on the day of just four of us, we hope. We're welcoming our cross-audience, of course, TV, radio, and YouTube, as we build towards what is a big week overall for Katie. The data we get, it might feel thin on the ground in terms of people inside the office, people making the most of run-up to Labour Day, but we're all focused on Labour data.
Absolutely. And think about what the week we're just coming off of was. Just a huge macroeconomic week, of course, with Jackson Hole. Now we have labor data to look forward to. You look at the markets, you are seeing, I don't know, a little bit of life in the S&P 500, still red, but it's a setup we're similar to. Energy just continuing to crush it.
I mean, and over the course of the trading day, you really saw Europe, Asia be worried by the sell-off that we saw on Friday in the US trading. One point, the all-country world index was off significantly by about 2%. It then clawed its way back, and so too have the US benchmarks. S&P 500 down just 0.1%. The Dow down just 32 points, 0.1%. The Nasdaq off by 0.5%. So actually, big tech still feeling the pain from a worry of a more hawkish Fed. A hawkish Fed that now Neil Kashkari thinks has got the message for the markets. And overall, the Russell 2000 off by 0.4% as well, Taylor. Small caps on the downside.
It is all about energy. Underneath the surface, when you think about what is lower on the day from a headline sector level, underneath the surface, really energy just firmly in the green. 100% of the energy names within that sector are green on the day. I think the problem when we talked about the push-pull feeling in the markets, Chanel, is that big tech has really been weighting down this index. That's by far the worst performer. You're off about 0.8%. And so you're really sort of getting that as the big sort of dragger here on this market.
Draggers, but there are some interesting gainers because when you look what's happening inside the NASDAQ 100 and the NASDAQ composite, you're watching Pinduoduo just absolutely surging and extending some of its gains. A little less fear of delistings, although there's 50-50 chance of that, according to Goldman Sachs. Advanced imaging up 100% on the day. Catalent is your biggest loser today on the S&P 500. Down.
What is advanced human imaging?
It is an Australian company that focuses on
imaging, I assume.
Yes, exactly. And they signed an agreement to share data with a company in Estonia. However, that is among your biggest companies in the Nasdaq.
Love it.
So you have to scratch deep under the surface here for those movers, guys.
You do it, Shanali. You do it. Meanwhile, I mean, guys, overall, we see the individual micro stories, the big moves in the market. And all of this, from a sentiment basis, though, when you're looking at the broader benchmarks, is more predicated on what we think about the hawkish Fed. And 75 basis points is now sort of the odds on are clawing their way up to, what are we at, about 70% expectation for a 75 bip hike as soon as September. And it was interesting, Katie, there wasn't just the Fed we're thinking of those sorts of magnitudes of moves, but also the ECB.
Absolutely. The global tightening pressure that's really coming to the fore. And you have a lot of market participants cheering on that pricing. Take a listen to what John Stoltzfus from Oppenheimer had to say on surveillance earlier this morning.
And we think it's good that the Fed is doing what it's doing. It's on the case. It's going after inflation. It recognizes it's going to take longer as we look at it today for the Fed to put inflation in check. But the main thing is they're doing it. And what that will likely do is it'll kill off, the speculative pockets like the memes or all those multiple currencies.
Again, that was John Stoltzfus from Oppenheimer talking on surveillance earlier this morning. But guys, even with the Fed tightening, think about the conversation that we've been having, the fact that you do have energies, commodities just soaring again, the thing that the Fed can't control and such an important input into those inflation expectations.
Yeah, particularly as we've been talking a lot about sort of the stickiness of those. I think a lot about wage gains. The Caroline and I have been talking a lot about those as we think up into Friday and those who are really sort of seeing those wage gains that are not being eroded by inflation, sort of how that rolls out demographically as well. I get nervous though, Shelly, about taking sort of this one-day gain of energy, and I know that it really had been coming off for a while, so I think we need to see some more data points this here, but certainly can't be good news here for Federal Reserve.
And to the extent that energy is the ballast to the market, is that a healthy thing for the stock market? You think about Morgan Stanley and Mike Wilson, what he's saying now is the next set of risks and its earnings as much as or more than, frankly, the Fed as a stocks threat. That kind of choir is growing louder in the market. You have Liz Young over at SoFi making similar concerns. Scott Meinert over at Guggenheim, similar concerns over those earnings revisions we may still face.
And I suppose that therein is the ongoing narrative of whether a company can pass on some of the pressure that they see, whether margins can be supported, and overall whether this does end up being a really hard, deep sort of a slowdown, or actually whether, goodness knows if they can actually orchestrate it, some sort of soft landing, and we're into recession then out of it as quick as we could
Is soft landing still in the vocabulary? Is that still being bandied about as a possibility? I don't know.
I'm not even sure what it means anymore.
Yeah.
To be honest with you.
All I know is we're taking a look at the markets, at least today. We're trying to claw our way back on the day for an S&P 500. Interesting with some of the technicals, and I know that we're always really focused on fundamentals, but with the S&P 500 failing at 4,200, I know that some people, Jonathan Krinsky over at BTIG, looking at then 3,900 as sort of the next leg lower, but not quite testing some of the mid-June lows that we had seen. And so certainly looking at some of these technicals too.
And look, a soft landing isn't about the market. The soft landing is about the jobs data. Yeah, like and just really about whether this is a slowdown we can orchestrate that doesn't hurt people, their earnings, their jobs too much. 300,000 on Friday, that doesn't look too bad from my perspective.
What we heard from Jerome Powell saying that getting inflation under control, you're going to see below trend growth. It almost feels that the Fed has given up on the possibility of a soft landing, but they can't say that.
I think what's interesting also is that divergence in market lows that folks are calling for. Michelle Snyder, who we spoke to earlier at Market Gauge, 3,500 is what her bet was. And, you know, this is a risk management game, guys. I mean, how do you hedge a risk that runs between 3,500 and 3,900 as the lowest of the lows?
By buying commodities, according to Goldman Sachs, I guess.
I was going to say. Well, guys, this is fun. You guys are being very nice to me as I plow through these simulcasts alone. But that does it for now. We'll be back together again live on TV and radio and YouTube at 4 p.m. for our Beyond the Bell coverage when we take you through today's market close.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld in for Carol Masser this afternoon. Katie's live in the Bloomberg Interactive Brokers studio. I'm live from my apartment in Brooklyn, continuing to recover from COVID. I should be back in the studio on Thursday or earlier if I test negative, which, you know, I feel
Fingers
great,
crossed.
so
I am
fingers crossed I do.
manifesting that. I'm sending that into the universe. I'm going to see what responds.
I don't know what your well, I do remember actually what yours was. It was every day I was just waiting for you to come back, and you would just. The problem, Katie, that I found with my little antigen tests.
Yeah, tell me.
Is that it's turning bright red so quickly.
Yeah.
Like as soon as I drop those 3 or 4 drops of solution into antigen test.
Also known as snot. Yeah.
No. It's, the mixture.
Yeah, but,
I'll call it a solution.
There's inputs into that. But, I mean, I know that there's no science behind this, but my line did get fainter. But again, I know there's no science behind it.
I'm just waiting until, day 10 when I just don't have to test anymore because, all bets are off then.
All bets are off.
Hey,
but
speaking of all
how
bets
do you
are
feel?
off.
How do you feel?
I feel really good.
That's
Thank
good.
you.
Are you just saying that?
No, I've totally turned a corner.
Okay, all right.
Yeah, I'm like, I think I'm fully
not
recovered.
delirious?
No, I'm fine.
Okay.
I'm totally fine.
All right.
I actually think that, at some point we're going to, I don't want to, I don't know what the CDC is going to do, but just given how quickly I started feeling better after, it took about 7 days, but this is like day 8 for me at this point.
You've got to not push it. I'm worried that you're going to get a false sense of confidence and overextend yourself by, maybe anchoring for 3 hours every day. I don't know.
I will take this advice to heart.
Yeah, please do.
Hey, we only have 20 seconds left, but I want to refer to this Neil Kashkari article that's kind of blowing up the Bloomberg right now. The Minneapolis Fed president speaking to our own Tracy Alloway and Joe Weisenthal. You guys mentioned this earlier, saying that he's happy to see the market's reaction to Jackson Hole. Did you see this?
I did see it. And, it makes sense when you think about that loosening of financial conditions.
All right, we're going to have more on this throughout the next hour. You're listening to Bloomberg. Let's get to world and national news with Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. Ukrainian President Volodymyr Zelensky is accusing Russia of trying to create a global sense of fatigue about the invasion. That includes restricting the flow of gas to drive energy prices higher. European Commission President Ursula von der Leyen says the European Union is working on a plan to address spiking energy costs. Well, the EU could also soon offer Ukrainian forces new sniper, demining, or officer training as part of a new mission. Bloomberg's Nathan Hager has more from Washington.
EU Foreign Minister Josep Borrell plans to propose the new training in a meeting with EU defense ministers in Prague starting tonight. A document obtained by Bloomberg shows Ukraine has identified specific training needs, including for medical, demining, and sniper missions. Ukrainian soldiers have already been offered various training efforts. The UK has been joined by Canada and Sweden in putting thousands of Ukrainian forces through basic training, and the Netherlands and Germany have been putting the Ukrainians through their paces on self-propelled howitzers. In Washington, I'm Nathan Hager, Bloomberg Radio.
A team from the International Atomic Energy Agency is heading for the Zaporizhzhia nuclear power plant in southeastern Ukraine. The inspectors will try to assess damage to the plant from nearby attacks that continue. Ukraine has warned that the situation remains dangerous, even though 2 power units have been reconnected to the grid following an outage. Russia says it will ensure the security of the inspectors. NASA has delayed today's scheduled first launch of a new moon rocket. A problem with one of the rocket's engines forced the postponement. Friday is the next launch window. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons, Tim Stanovic, and Katie Greifeld. We are coming to you live from New York City this afternoon. Katie, among the most read on the Bloomberg terminal, an update to the trickle of information that we're seeing over the raid earlier this month at Mar-a-Lago. The Justice Department is saying that some records seized at Mar-a-Lago may actually be privileged.
Yeah, according to the U.S. Justice Department, quote, a limited set of materials seized from former President Donald Trump's home by FBI agents seeking those classified documents. They may be covered by attorney-client privilege. The government made that revelation in a filing Monday in a lawsuit in which Trump is seeking appointment of a so-called special master to review documents taken from Mar-a-Lago back on June 8th. That's when federal agents carted away 20 boxes of records, Tim.
Yeah, the Justice Department's own privilege review team, quote, identified a limited set of materials that potentially contain attorney-client privilege information and, quote, completed its review of those materials. The government is now following procedures for handling privileged materials set out in the Federal Bureau of Investigation affidavit that was used to get the search warrant. Remember, Friday was the day that the affidavit was released. It was heavily redacted. It did state that a special privilege team had been assigned to search Trump's office. According to procedures set out in the affidavit, the government could seek a court order to determine privilege, keep privileged documents away from criminal investigators, or, Katie, ask Trump to assert privilege in detail.
Did you see the redaction? There was so many memes made about it. It was just like a wall of black
lines.
bars. Yeah.
Yeah, that's what I saw also.
Pretty incredible. In any case, Kevin O'Brien, he's a former federal prosecutor. He's now a white-collar criminal defense attorney. He said that the Justice Department's use of a privileged team is standard operating procedure. So there you have it.
Well, we're going to get more information. The Justice Department is due to file a more detailed public response to Trump's lawsuit by Tuesday. This is part of Cannon's order over the weekend. Trump will then get to respond by August 31st. Check out this story on the Bloomberg terminal and at Bloomberg.com. You're listening to Business Week.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We have got 43 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ in the red. Little change, though, right now on the S&P 500 index, down by about 1 point. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading well off their session lows with the Dow down 32 points, was down 310. S&Ps are down 3, while NASDAQ pares losses to 45. The U.S. 10-year yield at 3.1%. Gold is little change. Oil is surging, and Bitcoin is trading higher by 1%. Among the main 11 S&P sectors, energy, utilities, industrials, and staples were in the green. And leaders to the upside in the Dow, Walmart and Chevron, while 3M and Salesforce led to the downside. In other news, the New York Post reported that Netflix is still mulling pricing for an ad-supported tier. And wrapping things up, aerospace company Heiko reports after the bell. Live from the first word, your news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg. Type squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Tim Stenovec and Katie Greifeld live from New York City this afternoon. And a Bloomberg exclusive that we wanted to get to this hour now. This by our own Sri Natarajan, finance reporter for Bloomberg News. He joins us right now from the Bloomberg Interactive Brokers studio in New York. It's all about how another Morgan Stanley executive, whose communications were sought in a U.S. probe into how Wall Street handles big stock trades, has been placed on leave. This amid a flurry behind-the-scenes activity in the investigation. An exclusive dropping over the weekend from Sri, who joins us now. Sri, what do we know about Charles Leisure?
Well, he was a banker on the equity syndicate desk at Morgan Stanley. And the whole thing is interesting because now it's been about 9 months since news came out that his boss, Pawan Passi, who was the head of the U.S. equity syndicate at Morgan Stanley, the best equity franchise on Wall Street, was placed on leave. And soon after, we got this news that the Department of Justice was carrying out this investigation into the block trading practice. That in itself was a shock because this is not your typical crime, white-collar crime that you see prosecutors going after. This is not as cut and dried as an insider trading allegation. We have never seen action like this, and it's certainly created a lot of interest and worry across the street. And it appears that a lot of the focus right now, at least, seems to be on Morgan Stanley. And this latest development is certain to bring it back to the forefront. And everyone is going to pay close attention for the time.
Well, Sri, let's back up and put some context on this story. Why is there a probe into block trades right now? Because I'm pretty familiar with block trades. I hear about them all the time. What exactly is being looked at?
And that's the thing. So when we talk about block trades, it's effectively some bankers on a desk taking down a large slug of stock from an investor or a company wanting to get out of a position and then finding investors in the market. The thing that seems to be concerning prosecutors and what they are paying attention to is there some unnecessary leakage of information? Are there participants in the market able to act before a block trade hits the tape? You can see how that's a problem, right? If you have a stock and you know someone's going to sell a sizable chunk in it, the stock's likely to go down. Can you act before that and make some easy money and then possibly even help out the bankers by helping them execute that trade? Certainly there's problematic territory we're in. It operates in a bit of a gray area because how do you carry out a transaction that involves taking down risk on your balance sheet and then offloading it without feeling out the market? And that's the gray area in which everyone operated.
Okay.
And now we're trying to see if anyone crossed the line.
I'm so glad you said that, Sri, because that's exactly where I wanted to go. The idea of, if you have a big block of equity, right, in a company that you're looking to sell, how do you sell that? You don't just go out and sell it all on, Craigslist or something, right? Or post something on Craigslist. You got to call and you have to feel things out. So what is this gray area and how does a bank go about making one of these transactions?
Yes, but alternatively, you could also see that these are people who get nice, fat, 7-figure paychecks, whose job is to suss out risk in the market, know what the appetite is out there for various names, be technology specialists, know where the demand can come from. So you don't necessarily have to be overly chatty about what trades can be coming down the pike. At the same time, once you've commenced conversations, you also want to make sure that are there enough assurances being provided that people you're trading with are aware that you're potentially dealing with non-public information and there are restrictions in place on what you can do after obtaining that information. When I say that, I'm obviously veering a little bit into speculation territory because it still isn't amply clear what exactly the Department of Justice is looking at. We still don't know why Morgan Stanley put these two executives 9 months apart on leave. They haven't come out with a reason, but they certainly have gone out there and disclosed this probe, and they've also said that they could face some civil liability from other participants in the market who can raise claims and worries about having lost out because of indiscreet lips at Morgan Stanley.
And so how much of this is just a Morgan Stanley issue, or are other banks being looked at here?
For starters, from what we know, from what is public, only Morgan Stanley has come out and identified it as a risk factor, has identified it as a legal proceeding it is facing. No other bank has made that disclosure. It is understandable why Morgan Stanley could be the first target of this because they have the best business on the street. Maybe it is something where you start with one big bank and then work your way down, or maybe during the Archegos collapse, for instance, which is when we know that there was fresh life breathed into this investigation, they did stumble across certain recordings or certain emails or certain conversations that have raised suspicion inside the Department of Justice, and that's why Morgan Stanley is the focus, and at the end, maybe the only focus in this whole case.
Sri, we got about a minute left here. Help us understand what we need to look for in the coming months and perhaps even in the coming year. As you mentioned, this is 9 months old at this point.
It is at least 9 months old. We're aware that they have not just looked for communications tied to Morgan Stanley executives, but also various buy-side clients that they've dealt with. They seem to be poring over a lot of information. Earlier in the year, the Department of Justice did square away some pretty big cases. One's tied to Glencore and a unit of Allianz, and also bringing the charges against Archegos. So from our perspective, this does appear to be the most prominent investigation, at least one that's focused on the activities of banking executives, ones on the sell side that the Department of Justice is undertaking. And one does think that with the recent flurry of activities and more questions taking place, that in the coming days, weeks, and months, we will see more reports about exactly what is going on with this probe.
Sri Natarajan, finance reporter for Bloomberg News, joining us from the Bloomberg Interactive Brokers studio. Make sure to check out his story, The Exclusive. He wrote it along with Matt Robinson, Morgan Stanley banker put on leave as block trade probe heats up. You're listening to Bloomberg Business Week on Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovec and Katie Greifeld in for Carol Massar this afternoon, both coming to you live from New York City today. Katie, the meme stock, it just won't die.
It's very hot and cold, though. I mean, for Bed Bath & Beyond popping off, you have AMC falling. It doesn't feel like necessarily they're moving as a block anymore.
All right, well, somebody who's been reporting a lot on meme stocks over the past few years is Bailey Lipschultz. He's equities reporter for Bloomberg News. We're going to be talking to him in just a few minutes. First, though, Charlie Pellet, we got less than a half hour to go.
Indeed, we've also got red on the screen, Tim, with the Dow, the S&P, and NASDAQ just pulling up Bed Bath & Beyond. Look at that stock up 28.6% today. Down day for the rest of the market. We've got more on those meme stocks coming up. AMC higher now, up by 2.5%. Bottom line here, red on the screen with the S&P down 12, down 0.3%. Worst level in the early going. The S&P have been down by 1%. The Dow down 82 now, a drop there of 0.3%. NASDAQ down 77. That is a drop of 0.6%. The 10-year yield 3.11%. The 2-year 3.42%. Spot gold down $1 the ounce now to $17.36, down by about 0.1%. West Texas Intermediate crude rallying 4.1%, 96.88 a barrel on WTI. Treasury slumps, stocks wavered as traders recalibrate their expectations in response to the Federal Reserve indicating that it will continue to raise rates to tamp down inflation. Traders and investors, though, are continuing to digest Friday's Jackson Hole speech by Fed Chair Jay Powell. Claudia Sahm is director of macroeconomic research at the Jane Family Institute. She is also a former Federal Reserve economist.
I do agree. Powell rose to the moment and cut through the nuance, cut through misunderstandings that had come from prior meetings, and told everyone we are serious and we know it will be painful. They're trying not to have it be really painful, but the Fed is being honest about what's ahead.
And again, we've got the 10-year yielding 3.11%. Trademark filings suggest Apple may be staking claim to potential names for its highly anticipated mixed reality headset, all part of the tech giant's push into its first new product category in years. Apple shares today, they are lower along with a lot of other tech names. Apple down now by 0.9%. Recapping stocks lower, S&P down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, meme stock mania, it's set to live on despite wild swings, at least according to our latest MLive Pulse survey. This story written by Bailey Lipschultz. Bailey is Bloomberg News equities reporter. He joins us live from Hoboken, New Jersey this afternoon. Bailey, how are you?
I'm doing well, Tim. Are you doing all right with COVID? Everything?
Yeah, I am. Thank you for asking. I feel great. The reason I ask how you are is because I saw on Instagram that you got engaged this weekend. So congratulations.
Yay.
Thank you very much, guys. I appreciate it. Yeah, pop a question on Friday night. She said yes after many tears were shed. So I'm officially engaged and have a fiance, which is weird to say.
We would have definitely not brought it up if she said no. Just know, I need you to know that, Bailey.
And she knows she's marrying the meme stock master, Bailey Lipschultz, which is fantastic. Bailey, it's really exciting. So we're sending you our best here from Bloomberg Business Week. We do want to talk about meme stocks, though, because the MLive Pulse survey is out, and it says that investors think that meme stocks are here to stay. So talk about the methodology here, because this is something that our MLive team does, and it gets a great idea of what investors are thinking about.
Yeah, so every week we run a survey, kind of try to be as topical as possible. So this was crafted really after the madness around Bed Bath & Beyond about 10 days ago, around that Ryan Cohen kind of boom and bust after he dumped the stock. But yeah, so nearly 2/3 of the 522 respondents, so we are polling both strategists and portfolio managers on the Wall Street, as well as retail traders who have the terminal and are responding through the terminal link. And really the consensus for the most part was that even though you have kind of these boom and bust, whether it's AMC, GameStop, Bed Bath & Beyond, or even kind of the one-offs like BlackBerry and Costcorp, there is an expectation that it will continue to live on in one way or another. And the real reasoning that I got from talking to some people about the idea is just that commission-free trading. So whether you now have the ability to trade out-of-the-money call options or just buy the underlying stock at a fractional share is going to continue to be a kind of thesis that Wall Street has to think about. And that's really being driven by things like Reddit, things like Twitter, and other chat rooms like StockBlitz.
Okay, so I get the sort of market structure, why. You do have basically free trading, et cetera, et cetera. Talk to us about the psychology, though, because we're in a very different place from when the meme mania first started, when people were locked at home. Now you're able to go out and do things. You might get COVID like our friend Tim did, but why is this still happening?
There's still just an ability and kind of a mentality that you're bonding and connecting. So whether you're in a Reddit thread or a Discord chat talking about how you just bought more 8 preferred shares and you're excited about it, you feel like you're part of the movement is the understanding. And really, if you kind of take that and add on the fact that in a market that for the most part still is beaten down, we still have pretty light volumes, professional traders are more than happy to jump into some of these trends because it is an easy way to generate some alpha. And we are seeing, like even with Bed Bath & Beyond today, up about 30%. People are trading the call options for $45 strike price. The stock right now is at $13.50. So there still is very much that gambling aspect where investors, and whether it's retail traders, professional traders, are more than happy to speculate with a small portion of their portfolio, just given the potential returns.
Bailey, does it tell us anything about capitulation or about big picture, how investors should look at a bear market when we have retail traders getting involved in companies like this?
Yeah, I mean, the real debate, and we kind of got a mixed reaction from both pros and retail traders on the idea that that investors need to become net sellers for the market to really bottom. But it feels more like it's kind of just an offshoot, and it's another area for investors to trade. You look at the memorabilia space, it still is booming, even with the market really struggling to find its footing. So I don't, as much as people like to connect the dots and say the Fed is going to have to continue to hike as long as Bed Bath & Beyond jumps 30% on any given day, it does feel like, in the consensus from some of the people I talk to, is that that's very much misplaced and an easy thing to say, but doesn't actually, at the end of the day, drive a core fundamentals for the market, just because in the broad scheme of things, these are very much small companies. While the percentage jump is massive, it's just a drop in the bucket, broadly speaking.
All right. Well, Bailey, before we let you go, meme stocks, crypto versus SPACs. What did you get from professional investors versus retail investors, just in 15 seconds?
Yeah, professional investors like crypto the most, as do retail. Retail was a little bit more optimistic on meme stocks. About 23% said that would be the best asset class. Professionals only said about 15%, but very much crypto between the three was the favored asset in the next year.
Bailey Lipschultz, equities reporter for Bloomberg News, joining us this afternoon on the phone from Hoboken, New Jersey. Big thank you to Bailey, and congratulations once again. To world and national news, we go to Washington, D.C. for Nancy Lyons. Hey, Nance.
Thanks, Tim. Engineers are looking for answers following today's scrub of NASA's Artemis moon rocket launch. They were unable to chill down and condition one of the rocket's 4 main engines for the super cold fuel that it uses. NASA's Artemis mission manager, Mike Serafin, thinks it may be a problem with the lines feeding hydrogen to the motors. He explains why chilling the engines is so important.
We need the engine to be at the cryogenically cool temperature such that when it starts, it's not shocked with all the cold fuel that flows through it.
Serafin says they're not giving up, and they will aim to launch on Friday. The Justice Department, in a court filing today, told a judge that a limited set of materials seized from former President Trump's home by FBI agents may be covered by attorney-client privilege. It is the government's response to a lawsuit in which Trump is seeking appointment of a so-called special master to review the documents seized. Former FBI agent Brad Garrett believes there's much more to come in this investigation.
This case is going to go forward, special master or not. And I just suspect that the picture of this case, beyond just documents, we've yet to even see the beginning of that.
Brad Garrett says we still don't know why former President Trump had the documents in the first place. The Justice Department says it expects to file a more detailed response to Trump's request for a special master by the end of the day tomorrow. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stennebeck and Katie Greifeld in for Carol Massar this afternoon. Joining you from New York City, Katie, the U.S. Open, it has started. We've got professional tennis players.
Yeah, you're going to have to do the heavy lifting on this, Phil. I know you're a huge tennis fan.
Big tennis fan, yeah.
I wouldn't count myself as one. I wouldn't identify as a huge tennis fan. But you
As a New Yorker, though, have you ever been to the U.S. Open?
No.
You got to go.
I don't
so
think
easy
I'm
to
going
get
to, though.
Oh, it's so
because
fun.
I don't like tennis.
It's about more than just tennis, and I think you'll like it.
Is it?
Yeah.
My understanding of the U.S. Open is that it's a tennis game, and that's kind of what the whole event is centered on.
Well, it's a Grand Slam. There are only 4 of them that happen in the world.
Okay, is that just like a
Each year.
super big tennis game?
Yeah, they're the most important tournaments. The Australian Open, the French Open, Wimbledon, and the U.S. Open.
Okay, cool.
So it's pretty cool that one of the Grand Slams happens so close to where we live.
Yeah, that's a little bit cool, I guess.
Yeah.
If you like tennis, for sure, which you do.
Yeah. Okay, fair point. Bloomberg Business Week will be broadcasting from the U.S. Open on Thursday and Friday, so we're looking forward to that. In the meantime, there are some great stories about the U.S. Open as it kicks off this afternoon. This one by Jillian Tan about how U.S. Open is luring companies with $10,000 courtside seats and new access. So check this out, Katie. When the U.S. Open tennis tournament begins this week, expect handshakes both on the court and on the sidelines. New ticket packages combining courtside seats with exclusive dining or meeting spaces were snapped up by corporate buyers ahead of the event. That's according to the chief commercial officer of the U.S. Tennis Association.
Yeah, so I have a bone to pick. Why do you and Carol get to do all of this cool stuff? The last time I checked, I know that we're on YouTube right now, but radio is a pretty audio medium.
Yeah, but there's nothing like being in the action.
Yeah, I suppose. Very cool. Are you going to be courtside?
I don't know if I'll be courtside. This is my first time covering it. I've been to it quite a few times. I'm looking forward to it. Thursday.
Well, you played tennis.
Catch it here on Bloomberg Business Week. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell with the Dow, the S&P, and NASDAQ all on the minus side. We're off session lows with the S&P now down by 0.3% in the early going. Worst level of the day, we did have the S&P down by 1%. But right now, again, looking at an 11-point loss in the S&P. The Dow down 77, drop there of 0.2%. NASDAQ down 76, a decline there of 0.6%. 13 minutes to go. 10-year yield right now, 3.11%. The 2-year, 3.42%. Spot gold, little change, down $2 the ounce to $17.36. West Texas Intermediate crude is rallying 4.1%, $96.51 a barrel on WTI. So again, recapping, equities lower right now with the S&P 500 index down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. If the COVID-19 pandemic has shown anything, it's that public health emergencies require two things: efficiency and clear communication. When it comes to monkeypox, the U.S. response has fallen short on both counts. The Biden administration has been too slow to procure and distribute vaccines and too muddled in its outreach on the issue. Underlying all its missteps has been a lack of leadership. Rather than accept responsibility, Health and Human Services Secretary Javier Becerra has tried to deflect blame. It's fair to say that the past few years have presented public health officials with unprecedented challenges, but that's no excuse for repeating mistakes and failing to learn obvious lessons. President Joe Biden needs to demand better. This editorial was written by the Bloomberg editorial board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, here we are, less than 10 minutes to go to the close of trading on this Monday afternoon. The S&P 500 is lower by 0.4%, as is the Dow. The NASDAQ, the laggard today, down by close to 0.8, a little more than 0.8%. Let's get into it with Aaron Kennan, co-founder and CEO of Clear Harbor Asset Management. They've got over $1 billion in assets under management. Aaron joining us this afternoon on the phone from Stamford, Connecticut. Aaron, how are you?
Doing just fine, Tim. Thanks for having me back.
Yeah, it's always good to have you with us. I got to tell you, I was I'm working from home because I'm recovering from COVID, and I couldn't turn away last week in Jackson Hole, even though I was on sick leave essentially. And I texted Katie afterward, and I was as we saw the sell-off happen, and I said, Katie, this is what we've been talking about for weeks here. Like, this shouldn't be surprising to people. We knew Powell was going to be hawkish. We know that inflation is the number one concern for the central bank. Why is everyone so surprised by this? So I ask you, why is everyone so surprised?
Right. So, I mean, I think the rhetoric has been consistent, but there has been a belief since perhaps mid-June that the Fed at some point, perhaps even by the end of the year, would be in a position where they're looking at data and decelerating inflation, and that they may, in fact, be in a position to pivot. And I think what we heard on Friday was that's not accurate. Do not fight the Fed. If you're predicting a pivot soon, please do not bet on it. And so in some sense, I think the Fed was probably pleased with the market reaction, while investors clearly were not.
Well, we know Neil Kashkari was pleased. He said that on the Odd Lots podcast a little earlier today. That story just coming out on the Bloomberg in the last couple of hours, Katie, right?
Mm-hmm. And I feel like, Aaron, Powell almost gave us a blueprint for how to invest in these markets, because think about what he said. He said getting a grip on inflation, it could necessitate a period of below trend growth. And if that's the case, how do you structure a portfolio around that?
Well, it's tricky in the near term, but we're very much, guided by a lot of the sort of thoughts around longer term trends. And, if you look at major asset classes like fixed income, where you can quantify long-term trends by just looking at yield to maturity, that nominal number is significantly higher today than it was a year ago. And so that's a plus. But, clearly the equity market has been, experiencing significantly higher volatility relative to just a year or 2 years ago. Even though volatility hasn't spiked recently, it's still elevated relative to any sort of historical analog. And so it makes sort of thinking about risk-adjusted returns quite difficult. It makes the 60-40 portfolio start to look a little more attractive just because we've seen that move higher in the front end in particular on the yield side, where, twos today are at 342, and Fed funds are sort of pricing in the idea of maybe 3 3/4, 4% funds rate. And we know through the historical analog that 2-year Treasury yields in the peak in the Fed funds rate tend to generally coincide with one another. So it's a tricky time to think about the short term and try to tactically dip into this market. But in the long term, we still think there are plenty of opportunities.
Well, let's talk short-term opportunities and then long-term opportunities. So what short-term should investors be thinking about? Or maybe if we're saying investors, we should say traders if we're thinking about short-term.
Right. So I think if you're thinking about timing, you're thinking about being tactical, when we try to be, maybe marginally tactical, but more sort of structurally thinking long-term, you want to try to understand when the Fed's going to pivot or when the market's going to bottom. And so, tend to look at things like the energy complex. We haven't seen a collapse in the energy complex for sure. That tends to augur a bottoming in asset prices for equities. We haven't seen a collapse in valuations to any great extent. Usually valuations pierce through, let's say, 25-year averages. Even back in mid-June, we were trading not too far away from the 25-year average. And, we haven't seen the Fed, as we just discussed, put their foot on the brakes and say, wait a minute, we're going to pause and assess and maybe even cut in the future. That tends to augur, again, a bottoming process in the market. So I think we probably have a ways to go if history is any guide here.
And I know it's often not this black and white, but I am curious, when you look at, what we heard from Powell, the current setup in markets, what looks more attractive to you at this point, fixed income or equities?
Oh, gosh. Well, I think on a volatility adjusted basis, based on just where yields are and the setup is, certain components of fixed income, look interesting on a risk-adjusted basis. I think when you think about equities for the long haul on a nominal return basis, equities over, let's say, 10-year rolling period should return more. But I think that the trick will be is the willingness to accept incrementally higher volatility to achieve those returns relative to history. The S&P returns over the last 10 years through December 31st were about 16.5%. Well, over the last 25 years, they were just under 10%. So just to sort of think about where we have to sort of revert towards the mean in the future to just capture that 25-year return, it suggests we could be going through a rougher patch of lower anticipated returns for equities.
Yeah, but I mean, even that reversion to the mean is nothing to shake a stick at.
Well, I mean, it is if we're moving from 16.5 to 9.7, it would suggest that we have significantly more downside and on a nominal basis, not just a real basis, in equities just to capture that longer term return.
So, Aaron, I got to ask, because we're seeing declines now, especially after Friday. Is the bottom in for this market cycle?
Well, I take a look at where we were in mid-June, Tim, and we had still a steep yield curve. I think 2s, 10s were about 15 basis points. Now we have about a negative 30 basis point inversion. We had a dollar that, dipped down about 101, 102, and now we're back up near 20-year highs. And we have a Fed that's sort of saying not so fast, whereas I think back in mid-June we had a Fed where at least the market perceived, some sort of pivot around the corner, and we're trying to sort of anticipate that, and markets started rallying. And so I think that the probability that we're at a bottom level is still on the lower end of the spectrum, and that we could still experience some pain here. And I also sort of point to the reality that quantitative tightening is going to accelerate in September. It's going to double in size from August to September. That's more liquidity coming out of our capital market system. That's rarely a positive for the equity market and for credit.
And
Aaron Kennan, We love it when you take the time and join us. Thank you so much for joining us on Bloomberg Business Week this afternoon. Aaron Kennan is co-founder and CEO of Clear Harbor Asset Management. They've got over $1 billion in assets under management. Aaron joins us this afternoon from Stamford, Connecticut. You can follow him on Twitter at Aaron Kennan. That's AARONKENNON. Well, we are just a couple of minutes away from the market close on this Monday afternoon. The NASDAQ is now lower by 0.9%. The S&P 500 is down by just 0.5 percentage point right now. The Dow Jones Industrial Average down a little shy of 0.5%. It's interesting to see this on a day where we've kind of seen a lot of choppiness. In fact, we saw the S&P 500 move into positive territory a little earlier. Coming up next, it's our countdown to the close and our Beyond the Bell with our friends at Bloomberg TV. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are just about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Shonali Bassett counting you down to the closing bell, here to take us beyond the bell, the global simulcast. We're joined now by Katie Greifeld, doing double the work. She fills in for Carol Massa and Tim Stenovic, bringing together our Bloomberg TV, radio, and YouTube audiences worldwide. And we really do digest, Katie, a market that, after a significant sell-off on Friday, just couldn't quite find its footing.
Yeah, it's sort of a listless trade. I mean, we had such a huge macro hit on Friday. It feels like people are just maybe taking a breath here, reevaluating the landscape. You are seeing a little bit of a bump higher in the VIX. We're at a 26 now, but relative to where we've been, doesn't seem that impressive.
Highest since 2007. That's my key headline, of course, as we take a look at two-year yields, up about 3 basis points on the day at 343. Shawna, to your point, though, that further out on the yield curve, actually moves are a little bit bigger when you're rising an additional 7 basis points on the day. So it's interesting to always think about the reaction when you get an equity sell-off day, the flight to quality in treasury markets, versus days like today's when it's more the hawkish narrative that the path to yields is higher.
And are yields or are earnings the bigger story is what I wonder. I look back, I keep on citing, and I think it was a powerful note today out by David Kelly over at JP Morgan, this idea that even though expectations for a bigger rate hike has been a reality, that it's not the moves in the market that you think it would be, where there's more conviction behind that 75 basis point move.
Yeah, the conviction has tallied up a little bit. What does it stand at? About 70% probability that we'll get that 75-bip move as soon as September, but not just the Fed that talks about it, an ECB that starts to discuss the 75 basis point move too. Despite what is another day of losses on the stock markets, a very cheerful New York Stock Exchange as we currently look at people ringing the bell incredibly enthusiastically. That seems to be Teradata with much enthusiasm at the NYSE. The NASDAQ also celebrating what is a day of losses. The NASDAQ off by more than a percentage point, 124 points to the downside. S&P 500 off by 27 points. The Dow off by 183, that's 0.6% loss. And Taylor, the Russell 2000 also off by 0.9%.
One of the sort of bigger underperformers, Caroline, as you mentioned, the Russell along with the NASDAQ, as you mentioned. I'm going to take a look at sort of the sector level underneath the surface here. And Katie, I think what I love about this is it sort of gives us a broader perspective of the internals of the market. And under that, you really start to see the tilt to the downside, because for the radio audience, even the quote, best performers, there was only 5 sectors. Half of the best performers were still in the red. And so I'll highlight the ones that, of course, are in the green. Energy that we've talked about, utilities, and then food and staples. So a little bit of a defensive tilt when you think about food and staples and utilities there. Otherwise, I migrate down to the bottom of the screen. It's all big tech. Can you believe that? It's media and entertainment, software and services, tech, hardware and equipment, and semiconductor equipment as well. Those sectors were off as much as 2% or so on the day.
And if you dial down to the specific single stock movers, you see that sort of sector picture reflected in the individual names. I'm both Tim and Carol today, so I have both gainers and decliners. The decliners, I mean, it's all big tech. You have Apple, you have NVIDIA, some of the biggest volume names in trading so far today. As of today, it is 4:01 p.m. I guess the market is closed. If you did think about what managed to make it into the green, it was all energy pretty much. You have Diamondback Energy up there. That was the biggest gainer in the S&P 500. And then I threw, Bed Bath & Beyond on there. I don't have a good reason for what we're seeing in Bed Bath & Beyond, but it was up 25%.
Maybe I think they're
today.
Securitizing Bye Bye Baby to get a loan.
There you go. So a little bit of a fundamental reason, a really give and take sort of meme market, when you think about what we saw in some of the OGs today, GameStop and AMC, nice reminder that there are actual companies underneath these tickers.
And actual liquidity problems and actual banks that they have to turn to. Bed Bath & Beyond, one of your key movers. Let's go cross-asset for a minute, Katie. And what was a key move for me cross-asset was the oil market. Look at it. WTI crude up more than 4%. Still sub $100, but we're at $96.94. We saw Brent, of course, move up almost 4% as well. This is much more a supply-side concern. We actually have, despite the hawkish tones coming from global central bankers, an oil market that shrugs it off. It's more looking at Libya, the tension rising there, the issue that might have in terms of further supply side curtailment, and indeed, therefore, a market that is also incredibly tight. You see actually some of the metals come off. Overall, copper managed to withstand some of that hawkish narrative coming from central banks. Steel was off by about 2%, zinc off by 1.2%. I'm looking at what happened in FX markets. Now, this was a story of dollar strength. Now, oil market managing to rally even into that market. We saw the British pound off by 0.3%. We await, of course, key data out in the UK. We're looking at Japanese yen off by 0.8%. So no real flight to safety here that's going on. But we did see a euro rally. This is important. It isn't just the Federal Reserve getting hawkish. It is an ECB too. And they managed to push the euro higher. Look at that. We're still at 0.9995. At one point, though, they broke back through parity. And the sovereign bonds, I mean, tail of sell-off across the world. This was what the key narrative was. It was European markets, everyone responding to that Jackson Hole speech. Yields sold off, particularly in Germany as well, Taylor.
You saw that here in the U.S. in full faith and credit, Caroline, on the two-year yield, which we've been really highlighting all day, just because getting numbers back to the highest yields we haven't seen, really surpassing June 14 of this year, going all the way back to 2007 is something certainly that we think about. And then, of course, higher yields further out in terms of the move on the day, up now 7 basis points on 10s and 20s, but still only about a 3.11 here on the 10-year yield. Nonetheless, it was sort of a yield higher kind of story, Chanel, as we're thinking about all of the yield, the dollar dynamics, and then the move lower in equities and the impacts on the cross asset.
And, you know, I wonder what this really means. We had a guest on earlier today talking about buying at these levels when you look at the 2-year, that it looks attractive still. But I do wonder what it means for the folks that have been telling us all year that duration is the place to start dipping into at the moment.
And if you think about what we heard, again, from Jay Powell just on Friday, that period of below-trend growth that could be a function of them trying to get a grip on inflation, that theoretically should be good for some of those longer-dated bonds. Interesting to see them sell off as hard as they are right now. Especially, it's been, most of the action has been in the 2-year yield. I know the size and the scope is more impressive when you think about how high we are, but still a flip of the dynamic.
And I think, I said it already, but I think a large part it was in sympathy with what happened in Europe to an extent and what happened on the German borrowing costs as well. I wonder how much we are going to start to see at any cost. The breathing space Anil Kashkari, a sort of a perma-dove who turns very hawkish, can give to world central banks right now. This is front and center of focus on inflation. And we look towards, hopefully, some sort of steadiness in the labor market here in the US. But the same can't always be said in other economies.
Navigating all of those, I bring you another note from Piper Sandler, some of the economics team, of course, out of there that we often cite on this program, saying that their best estimate of peak funds rates continues to be about 3.25 to 4. But clearly, this is a Federal Reserve showing that not only, of course, needs to hike aggressively to tackle inflation, but then, of course, how long do they stay there to really make sure inflation comes down before we think about an economy rolling over and then what 2023 looks like?
There are a few unknowns I'm really curious about. This idea of potential cuts into next year and how much divergence is forming around that idea. And then separately, the point that we have been talking about ad nauseum, which is quantitative tightening, and the unknowns around what that means, both in terms of market liquidity and the equivalence of what that means in terms of a further rise on top of the initial rise in rates.
I mean, it is unprecedented that we have the Fed both cutting and quantitative tightening at the same time. It feels like we haven't seen too much disruption. I know there's a lot of concern about liquidity right now, but there's a lot of noises, worried noises going forward that sort of the liquidity profile of markets, that thinning of volume should get even worse. But, you know, we'll see as soon as QT ramps up next month.
And also we know that this isn't a great time of year in general for market losses. September October, more often than not in the last 25 years, do tend to hand you a healthy loss. Maybe 0.7%. It's generally on average less than a percentage point, but it's still a loss on the month.
And it's volatility that, surprisingly, we think that August is quiet summer dog days, but it's
hasn't felt quiet.
not been
it's
quiet.
in every August that surprises to the upside when we think about volatility in VIX.
The volatility tipping higher, I think the reason it matters so much, if that issuance starts to clamp down, then all of a sudden you're thinking again about activity into the end of the year, losses on bank books, profitability declining, and jobs once again. It's quite a vicious cycle, isn't it?
Heavy questions for a Monday. A lot to think about, and a lot to think about ahead of what's going to be a very busy week when you think about what awaits on Fridays with the payrolls data. But in any case, guys, thank you so much for being kind to me as I play both hats here. But in any case, that does it for our cross-platform coverage of the market close on Bloomberg Television, radio, and YouTube. We're going to be back tomorrow at the same time, same place.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld in for Carol Masser this afternoon. We're coming at you live from New York City. Katie, another great simulcast.
Oh, stop. You're just saying that.
Well, look, I should probably, remind everyone. So Katie and I are co-anchoring the show together. She's the only one in the studio, though, as I continue to recover from COVID. We can't do the simulcast that we do with our TV friends.
We don't have the technology yet.
Yeah, I mean, I don't have like the TV studio at home, so
Next
I can't
pandemic.
join in. Next pandemic, yeah. But hopefully only a couple more days, if any, of doing this, and then I can be back in the studio and we can do this again in person.
I am manifesting that. Again, I'm putting this into the universe, and I hope the universe is going to give it back. I believe in that.
Okay, well, speaking of the universe, we got a lot more program coming up in the next half hour. We're very excited in just a few minutes to speak with Paul Lundstrom, the Chief Financial Officer of Flex. He's going to be joining us. We're also going to be chatting in just a few minutes with Carrie Schuffman, Head of Women's Strategic Segment at UBS. So we're looking forward to that as well. First up, let's get to world and national news with Nancy Lyons in D.C. Hey, Nance.
Thanks, Tim. The Justice Department said it says it has completed the review of documents seized from former President Trump's Florida home this month. Bloomberg's Nathan Hager has the latest from Washington.
Federal prosecutors say a limited set of material from the August 8th search may be protected by attorney-client privilege. That revelation came in a court filing in former President Trump's lawsuit to have a third party known as a special master review the documents. FBI agents carted away 20 boxes of records from Mar-a-Lago, including 11 sets of classified material. The judge has indicated he could approve the former president's request for that independent review. There will be a hearing on it this Thursday. In Washington, I'm Nathan Hager, Bloomberg Radio.
NASA is trying to figure out how to fix its newest moon rocket that was supposed to lift off today on the Artemis mission. Officials say controllers were unable to resolve a temperature problem with one of the rocket's 4 main engines. Mission manager Michael Serafin says they may try again later this week.
Friday is definitely in play. We just need a little bit of time to look at the data, but the team is setting up for a 96-hour recycle.
Mission manager Michael Serafin says they are not ready to give up. It's day one at the U.S. Open in Flushing Meadows in New York City, with Serena Williams beginning her competition in the night session at Arthur Ashe Stadium. This could be the final tournament of her career. The 23-time Grand Slam singles champion has indicated the tournament, the last Grand Slam of the year, will mark her farewell. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Katie Greifeld live from New York City this afternoon. Katie, a lot happening with ESG. And it's interesting because we're seeing sort of a little bit of backlash happening right now. Whereas a couple years ago, when talking ESG, it was just all the rage. And I think one issue and one challenge that a lot of these companies have is there's no sort of formal definition for what is or is not ESG. And we see a lot of companies just using the term at free will.
And backlash, I think, is a good word to describe what's going on right now. So one of a very heavily read story on the Bloomberg terminal is asset managers renaming ESG funds told to brace for that backlash. So asset managers, a bunch of them had just reclassified hundreds of ESG funds, and they should expect to have to explain themselves to their regulators and their investors. That is according to lawyers who advise the industry, Bloomberg News is reporting.
The warning follows the recent redesignation of about 700 funds in the EU to a category known as Article 8, which is seen as offering some environmental, social, and governance attributes. The fund class has mushroomed since its introduction in March last year to now make up roughly half of the total domiciled in the EU, or $3.8 trillion. That's according to an estimate from analyst Katie at Morningstar.
Mushroomed. I like that verb. I'm going to try to use that. If you look at Europe specifically, Europe's investment management industry, it's struggled to adapt to the region's ESG rulebook that is known as the Sustainable Finance Disclosure Regulation. It's been undergoing constant adjustments in the almost year and a half that it's been around. The SFDR requires firms to classify their investment products under one of three categories: Article 6, Article 8, or Article 9.
In the second quarter, well over 600 funds were upgraded by asset managers to Article 8 from Article 6. A further 16 were downgraded to Article 8 from Article 9. That's according to estimates from Morningstar. But, it's not too late to start early to start thinking about predictions for next year. I think ESG is, and sort of the backlash to it, will be a big theme next year. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks finished lower with the Dow, the S&P, NASDAQ all declining today. Stocks and treasuries dropped as traders recalibrated their expectations in response to the Federal Reserve indicating that it will continue to raise interest rates to tamp down on inflation. Today, we saw the S&P 500 index drop 0.7%, down 27 points, ending the session at 4,030. Dow Industrials down 184 points, down 0.6%. NASDAQ was down 124, falling by 1% today. The 10-year yield, 3.10%. Two-year yield, 3.42% now. Spot gold down 60 cents the ounce. Little change there, virtually flat on the day. $17.37 the ounce, while West Texas Intermediate crude surged 4.1%, $96.88 a barrel. Again, recapping, turned out to be a down Monday, extending losses from last Friday's plunge. S&P down today by another 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, UBS has got a report out, and it talks about the differences between men and women when it comes to how they think about their finances and planning for, well, retirement. Women know they're living longer. 78% believe that they will outlive their spouses, but they tend to opt out of long-term finances. Even though 80% say retirement planning is a top priority, according to this report from UBS, 54% say that, quote, my spouse takes the lead in major financial decisions. Here to discuss why this is happening and how we can reach gender parity, or even better, is Carrie Schuffman, head of the Women's Strategic Segment at UBS Global Wealth Management. Carrie joins us this afternoon on the phone from New York City. Carrie, how are you?
I'm good, thank you. Thanks so much for having me on the show. How are you?
Yeah, doing really well. It's good to have you with us. You know, I shared this story a few months ago, but I think it's important to bring up. My grandma is 99 years old, and she lives in a retirement community. And she had a party they do a yearly party for everybody who is turning 100. She turns 100 in October. And I talked to somebody who was able to go to the party. I wasn't able to make it. And I'm gonna try to get these numbers right, but it was the spirit is there. Of the dozen or so people who are turning 100 this year, 10 of them are women, and only 2 of them are men. And it really speaks to, at least to me, the way that women outlive men.
Yeah, I mean, I think you're exactly right. You know, the reality is that women do tend to, on average, have longer life expectancies than their male counterparts, on average by about 5 years. And you know, congratulations to your grandmother as well for that momentous occasion, about to celebrate 100. But I think you're exactly right. That is the reality that we tend to see. I think about my own grandmother, for whom we just celebrated her 90th birthday earlier this year, and she's been widowed for over 5 years already, and then has been on her own. And that's really, I think, part of the reason why, and the catalyst behind a lot of the research that we've done here at UBS, focused on women and financial well-being, and helping to ensure that women from all different walks of life and financial situations, ages, generations are prepared to navigate their financial journey.
Yeah, what's remarkable to me about this research that you did at UBS is that the U.S. is kind of in the middle when it comes to women deferring long-term financial decisions to their spouses. On one end, you have women in Singapore who 72% say that my spouse takes the lead. The other end of the spectrum, 39% in Mexico. So, you know, it's not just a problem here in the U.S., it's a problem globally. But how do you explain the regional differences or regional variations here?
Yeah, I mean, I think it's a great question. I think it depends on many different factors. I think it depends on demographics, culture, how families are structured as well. Certainly that applies here as well. I would say in the United States in particular, which is where my team and I focus our efforts, you also have to really take into account the historical context around the topic of women and money. And this certainly varies by geographies as well. But you think back to something like it wasn't until 1974 that the Equal Credit Opportunity Act was passed, which gave women the ability to apply for credit, a credit card, a mortgage, et cetera, without having to have a male cosigner. I mean, 1974 was not that long ago. So there were a lot of barriers, I would say, and things that made it more difficult for women to gain equal financial footing until relatively recently. And certainly that, I think, plays a role in all of this as well.
Well, let's talk about partnership here, because according to your research, you write that women who approach long-term decisions in partnership with their spouses report soaring levels of satisfaction. So how do people go about doing this? I mean, I do think that oftentimes in partnerships like these, there is one person who handles, certain tasks and another person handles other tasks, and it's kind of divided between the two.
Absolutely. And I think that's human nature, right? If you are in a marriage or partnership, we all have time constraints no matter who we are or where we are in our lives. We have to take a divide and conquer approach. Certain things take priority over others. But I will say that when it comes to long-term finances, it's critically important, whether you're single, whether you're married, whatever your marital status may be, that you have an active understanding of where you are in your financial life and sort of where you're heading, both to be able to achieve your own goals, to weather any personal headwinds, but to also weather, the more macro environment around you. Our research actually showed, and you alluded to this, that only 1 in 5 heterosexual married couples here in the U.S. actually share equally in the long-term financial decisions. And again, as you mentioned at the onset, about half of women tell us that they defer those long-term financial decisions to a partner or spouse. But I think it's a question of trying to make the time, trying to also overcome some of the confidence gaps that our research has uncovered. Surprisingly, 70% of the women with whom we spoke said that they believe that women on the whole tend to overestimate what's required to be financially engaged. So certainly trying to break down some of those barriers, so some of those misperceptions around what it takes to have those meaningful conversations about where you are and where you're headed financially. And the good thing and the benefit is that our research shows there's tremendous upside to being an active participant in those financial matters, particularly among couples, whether it's greater satisfaction in your financial situation, higher confidence in achieving your goals, and my personal favorite, less stress and less arguments about money, which we know can be a tough conversation for many couples and families. But research shows participating equally and having a say can reduce some of that tension.
Less stress is always welcome in all parts of life. Carrie Shuffman, head of Women's Strategic Segment at UBS Global Wealth Management, joining us this afternoon on the phone from New York City. Thanks so much, Carrie. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovic live from New York City on this Monday afternoon. Really looking forward to our next guest. The CFO of Flex, Paul Lundstrom, is going to be joining us in just a few minutes. Flex is a company that does it all. They're a global manufacturing company. They build products for companies like Apple, Cisco, Ford, and more. Really excited to have Paul join us in just a few minutes. First, though, Charlie Pellet, we got a lot of action happening in the after hours.
Indeed, absolutely. Let us begin with what happened on Wall Street today, Tim. We had the Bears flexing their muscles today with the S&P down 27 points, a drop of 0.7%, another 0.7% after Friday's more than 3% crushing sell-off. We had the Dow down 184, down another 0.6%. NASDAQ down 124 today, a drop there of 1%. Stocks and treasuries fell again as the realization that interest rates are likely to remain elevated for an extended period continued to force a repricing across assets. So today, the 10-year yield, 3.11%. The 2-year yield, 3.42% on the 2-year. Spot gold, little change, down 43 cents the ounce to $17.37. Big move, though, for crude. West Texas Intermediate rallied 4% today, 96.82 for WTI. Bottom line, down day. As for the overall market backdrop, Aaron Kennan is CEO at Clear Harbor Asset Management, and he was our guest right here on Bloomberg Business Week.
So, I mean, I think the rhetoric has been consistent, but there has been a belief since perhaps mid-June that the Fed at some point, perhaps even by the end of the year, would be in a position where they're looking at data and decelerating inflation, and that they may, in fact, be in a position to pivot. And I think what we heard on Friday was that's not accurate. Do not fight the Fed. You know, if you're predicting a pivot soon, please do not bet on it.
And among some of the tech names that sold off today, Apple down 1.4%, Amazon down 0.7%, NVIDIA down 2.8%, Meta Platforms down 1.6%. That parent of Google down 0.9%. After the bell, word from China's Customs Office. China is suspending some meat imports from U.S. processing giant Tyson Foods. Recapping stocks lower, S&P down 0.7. I'm Charlie Pellet. That, Tim, is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as I mentioned, Flex is a company that really does it all. They're a global manufacturing company that builds products for companies like Apple, Cisco, Ford, and more. They do work across industries. They work in housing, they work in health, the cloud, digital energy, and more. It's publicly held. They've got a market cap of a little more than $8 billion. They've got more than 170,000 employees around the world. Needless to say, they've got a great idea of what's going on when it comes to some of the macro themes that we talk about here on Bloomberg Business Week all the time. Very pleased this afternoon to be joined by Paul Lundstrom, the Chief Financial Officer of Flex. Paul joins us this afternoon via Zoom from San Jose, California. Paul, how are you?
I'm doing very well. How are you, Tim? Thanks for having us.
Yeah, doing really well as well. So thanks so much for joining us. As I mentioned, you guys touch it all. You've got suppliers like Qualcomm, NXP. You've got clients like Apple, Cisco, Ford, and more. I want to start big picture here. Just give us an idea of what you're seeing around the world right now, and as our audience tries to make sense of what the macroeconomic environment looks like. How is this global economy?
I would say mixed. And you gave a pretty good intro, so I won't waste a whole lot of time sort of reintroducing the company. But like you said, we're in a lot of different areas: big tech, heavy industry, medical devices and equipment, automotive, consumer products. And so I think that's it's an interesting place to be, because that's a pretty representative cross-section of the world economy, being in so many product end markets. But we're also operating in 30 countries around the globe. So not only do we have that front seat to the wide range of product end markets, but we see the regional nuances as well. So it's we see the local market dynamics, we see the geopolitics. It's a pretty interesting place to be.
Well, Paul, let's talk, before we talk regional differences, let's talk industrial stuff. So where are you seeing strength in terms of different industries versus weakness? What are some highlights right now?
Yeah, just to kind of walk you through the portfolio, we just had an earnings call a month ago, and one of the things that we talked about was a little bit of softening in some of the shorter cycle consumer product markets. But for us, that is much more than offset by, we continue to see very robust demand in a number of other areas. Things like networking and connectivity, whether it's, cloud or 5G, that continues to be very, very strong. Network security continues to be very, very strong. A number of the industrial markets, including things like renewable energy, that probably seems obvious, but that continues to see robust growth. We're quite pleased with what we've seen there. Even things like automotive, which is, you would expect demand to soften if the economy softens up here in the automotive space. But frankly, there's so much backlog, and that whole sector is going through so much restocking that, try and buy a new car today, you're going to be on a waiting list for quite some time. So,
yeah, it's funny that you say that. My dad ordered a new car a year ago. He just got an email from Ford today saying that it's actually going to start being assembled later in September. So it took a year to get to that point.
Yeah,
so
later in September, exactly. And I hear stories now, Tim, of you're on a wait list to get on a wait list, and then we'll tell you when we can deliver. So at the moment, it's crazy.
So what is it holding up those products? I mean, we talk about chips all the time, but really dig into that for us. Like, where are you seeing in the supply chain the bottlenecks right now?
Well, certainly it's chips, to just give you sort of the short, brief answer. Semiconductors has been a big bottleneck, but so have things like overseas logistics, ports stacking up with container ship after container ship. Who hasn't seen aerial photographs of that? But, from my standpoint, you look to the root cause. Going into the pandemic, the world economy was already doing pretty well. And so in a lot of cases, producers were just barely keeping up with demand. Now you sprinkle in COVID, you see production, shut down for months on end in a lot of different geographies. While at the same time you have, and this isn't just a US thing, this is, world governments just pounded stimulus spending, pounded it. And so what that did was, I think demand did not go down like many thought it would. In some cases, demand actually went up. But then when you take away the ability for producers to produce, the backlog just went through the roof. And we've been trying to recover ever since.
Hey, Paul, stick with us because we're going to take a break. We're going to do some news, and then we're going to come back and talk more about these macro themes, and then also dig into the nitty-gritty a little bit. But really want to talk more about regional differences, and then I want to talk inflation, energy, and certainly other elements that you're seeing when it comes to this incredibly complex global economy. Right now, we are speaking to Paul Lundstrom, Chief Financial Officer of Flex. If you're watching us on YouTube, you'll see Paul. He joins us via Zoom from San Jose, California. Now, you might recognize Flex because they make stuff for Apple, Cisco, Ford, and more, working across a variety of different industries. Let's go to Washington, D.C. now for world and national news, and Nancy Lyons. Hey, Nancy.
Thanks, Tim. NASA will need to try again after scrubbing today's launch attempt for its big new moon rocket. There were technical glitches that forced the postponement, including an inability to chill down one of its main engines for a safe flight. NASA Administrator Bill Nelson says technical troubles are always expected on test flights.
We are stressing and testing this rocket and the spacecraft in a way that you would never do it with the human crew on board. That's the purpose of a test flight.
Nelson says you don't want to, quote, light the candle until the rocket's ready to go. Friday is the next possible launch window. The European Union is planning urgent action to try to dampen soaring energy prices. Commission President Ursula von der Leyen says it's time to reform the electricity market.
The skyrocketing electricity prices are now exposing, for different reasons, the limitations of our current electricity market design.
Von der Leyen says the current system was developed under completely different circumstances and completely different purposes. Many EU countries are calling for a price cap. They have a meeting to discuss options set for September 9th. The Justice Department says a filter team has completed its review of documents taken from Mar-a-Lago and has identified a limited set of materials that potentially contain attorney-client privileged information. Former President Trump has asked a judge to appoint an outside reviewer to see if any of the materials could be covered by executive privilege. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
So much for that update, Nancy Lyons. Tim Stenevec, I'm in New York City, broadcasting for Bloomberg Business Week. And joining me right now is Charlie Pellet. Hey, Charlie, I should say that for people who've been listening to the entire program over the last 2.5 or so hours, Katie Greifeld stepped away. She is anchoring Bloomberg Technology tonight on Bloomberg TV starting at 5 p.m., so she had to do a little prep work for that. But we do thank you for coming in to my aid and helping fill in for her, because we got a really interesting story here about Elon Musk. You might know him as the guy who really changed the game when it came to electric vehicles, but he's talking about oil.
Indeed. And Tim, I tell you what he's saying. This is an energy conference in Norway. He says, we actually need more oil and gas, not less. He goes on to say that he's not somebody to demonize the fossil fuels, but he says at the same time, we got to have a clear path to a sustainable energy future.
Charlie, it's something that Carol and I talk a lot about, this quote-unquote energy transition that a lot of people thought would happen in just a few years or happen overnight, the same way that it seems like technological disruption happens. This is a completely different game, though. I mean, cars that are sold today are going to be, with internal combustion engines, are going to be on the roads for more than a dozen more years.
Indeed. What is somewhat ironic about all of this is that the place where Musk made his remarks is Norway, which hosts the ONS Energy Conference. But that nation is in the midst of a transition itself. The country gets most of its electricity from hydropower. It has been an early adopter of electric cars thanks to generous government incentives. And by the way, to your point, it plans to sell only emissions-free vehicles by mid-decade.
I got to tell you, Charlie, visited Norway about 5 years ago. You think gas is expensive in the U.S. Norway, one of the most expensive places to fill up in the world. Earlier this year, $10 a gallon to fill up with gas in Norway.
They've got fantastic roads. I've been there too. All of that from that $1.2 trillion sovereign wealth fund that you can cover budget spending shortfalls with.
All right, Tim Stenevec and Charlie Pellet. It's Bloomberg Business Week on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks lower again today, adding to the rout that began Friday when Fed Chair Jay Powell made it clear the Federal Reserve is willing to let the economy suffer as it fights inflation. The S&P down another 27 points today, down by 0.7%. The Dow lower by 184 points, down 0.6%. Nasdaq tumbled 124, a decline of 1%. 10-year yield 3.10%. The 2-year yield 3.42%. Spot gold at $17.37 the ounce. West Texas Intermediate crude rallied 4.1% to $96.91 a barrel. So again, recapping, red on the screen, another down day for the U.S. equity market, down 0.7%. 10-year 3.10%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really appreciate it. I want to get right back to Paul Lundstrom, Chief Financial Officer for Flex. It's publicly held. They're a global manufacturing company. They've got customers like Apple, Cisco, Ford, among others. They got suppliers including Qualcomm, onsemi, NXP Semiconductor, $8.3 billion in market cap, 170,000 employees around the world. So they got a great idea of what's going on. Paul, when we were last speaking before the break, you mentioned some regional differences, and that's really where I want to dig into right now is get an understand from you about where we're seeing some economic softness. And I know, look, we can talk about what we've seen from Europe over the last few months, and some softness there and concerns about recession there. But where are some regions with strength and where are some regions with weakness?
Yeah, I would say I see less region to region and more product to product. And so, from my vantage point, the shorter cycle consumer product markets.
What is a shorter cycle consumer product?
Think of it as more commoditized electronics, cell phones and laptops and that sort of stuff. And that over the last, quarter or two, we have seen that soften up a little bit. It probably will, continue that way as you look forward. But I would say that's worldwide. That's not unique to one particular region. Where we continue to see robust demand is the more infrastructure-related technology. Things like 5G and cloud continues to be, very, very robust.
But are there areas of the world that are sticking out to you where you're seeing weakness?
Well, the zero COVID policy in China that's not going to help those local markets. I think people want to get back to work and get back to normal. And so, we see it more from a supply chain perspective than from a specific end market perspective. But yeah, that would be an example where it would be nice to get back to a little bit of normalcy.
Can you talk a little bit about how you've navigated China's zero COVID policy, Paul?
So for a company like Flex, so we're a large contract manufacturing company, and I think in this particular space, scale really does matter. We have a very wide geographic reach, and so we also have a very large supplier network. And so as things have been, coming on and offline in China over the last couple of years, frankly, it's been a little easier for us to pivot. I think we can produce like for like, from one region to the next without a whole lot of notice. And because we have a large supply chain network, it helps. So I think scale has been a big, help for a company like ours.
I'm wondering about globalization and where we are in 2022. Before we went into the pandemic, we saw a move, at least from the United States, of trying to isolate China to a certain extent under the Trump administration's tariffs and policies. And during the pandemic, we saw just how fragile so many of the global supply chains were. So now we're hearing from companies where they're onshoring or reshoring or nearshoring, use the shoring word that you want to use, but they're moving production to other parts of the world. What are the themes that you're seeing?
Well, first of all, you just nailed it. I mean, going back to the globalization and labor arbitrage that, and not just U.S., China. I mean, go back 10, 20, 30 years ago. It's been about labor arbitrage for decades now, and Western companies have made the decision to produce in the Far East for a long, long time. Because of all the issues that we've seen over the last few years, and you're right, it started with trade politics, and I would say it's been, across multiple administrations now where that tone and rhetoric really hasn't improved. Then you have COVID, then you have chip shortages, then you have logistics. It's been shock after shock after shock. And so what we're seeing now is this trend where customers are coming to us and saying, we don't want to produce everything. We don't want to be captive to Asia anymore. We want to produce in Asia for Asia. But if you can, we'd like you to produce in Europe, in North America, for North America, because we're worried about our supply chain resilience.
How tough is it to get employees around the world right now? I mean, I just returned from a ton of driving here in the Northeast and in the Midwest. And everywhere I went, whether it was West Virginia, Kentucky, Ohio, Western New York, help wanted signs everywhere. We hear about the labor shortage here in the U.S. What about for your industry around the world?
Yeah, so I mean, here's a funny little anecdote. I was driving around, I don't know, maybe 3 weeks ago, and I passed a storefront, and it was a search firm, and on the door it said "Help Wanted."
If they can't find help, then.
How ironic is that? So to your point, look, unemployment is low, and it's not just the U.S. We're seeing it all over the place. Where there's labor shortages in Malaysia, there's labor shortages in China, there's labor shortages all over the place, and so that definitely puts some pressure on the system, and we'll probably have some upward pressure on wages here for a little bit.
Well, that's exactly where I wanted to go, sort of this idea of inflation and to what extent you see inflation sticking around. We heard from Fed Chair Jay Powell on Friday, and we know that the Fed is taking very seriously the idea of tackling inflation right now. What is your own, as CFO of Flex, what is your own outlook on inflation? What are you planning for?
Well, we're planning for higher for sure. And, we do everything we can to insulate the business from that. And our probably quickest, most readily usable lever is price, and passing the cost inflation on our side through to the end customer. That's not great for overall inflation. And look, I'm not going to make a call on where we're going to be. I do like that the Fed is being more aggressive and trying to get this in check, but it could be around for a little while. Here's an interesting one though, because you mentioned the regional nuances and onshoring, offshoring, whatever shoring, word you want to choose. There's an offset, so as you move stuff from the Far East to Eastern Europe or to Mexico or to Brazil or wherever you want to go, it's possible that you'll pay a little bit more for labor. Although I would say labor arbitrage in China versus labor arbitrage today has changed dramatically. Wages for Asia production have gone up significantly over the last 10, 20, 30 years. But if I think about reshoring, there's cost offsets that make it advantageous. And I'll give you an example, just shipping costs. If you look at the logistics cost as a percentage of a product's total cost, for a company like Flex, it can range anywhere from a couple of percentage points to double digits, 10, wow. 12, 15%. And think about it, you look at the cost of an overseas container a year ago, 2 years ago, it's gone up about 10x, an order of magnitude higher. Right. And so if you can regionalize and produce closer to the end customer, you can cut some of those logistics costs out. So that's deflative. That would be a nice tailwind that everyone could use. The other thing I'll say about this regionalization trend, which I think right. is sort of interesting, is think about just the time on the water as stuff moves from Asia to North America.
And how much that time has grown as ports around the world, are congested. Paul, we unfortunately have to leave it there, but really appreciate you taking the time and joining us on Bloomberg Business Week. Paul Lundstrom is Chief Financial Officer of Flex. You'll see him on YouTube joining us via Zoom from San Jose, California. That is going to do it for Bloomberg Business Week on this Monday, August 29th, 2022. For Katie Greifeld, Paul Brennan, and the entire team at Bloomberg Business Week, this is Bloomberg.